when we are done.
Yes. Am I seen? Hello?
Hello.
Am I visible now?
Is it, are you live?
Yeah, I'm live. It's the link budget proposal 2018 5:30 p.m. I've written.
Okay. Let me just.
It shows as FPSB India under the second box budget proposal 5:30 p.m.
1 moment.
10 are watching now.
Can type it.
5:30 p.m.
Oh. Can you tell them when I start speaking whether they can hear or not?
Can you see? So Anand is on the screen now. And you need to confirm once Anand starts speaking, the participants can hear.
So hi everyone.
Can you start? Yeah.
Should we wait for some more time? There are only 24 people. So thank you people who have joined. I think we'll wait for another 2-3 minutes. I think there will be some more participants joining. So I'll wait for another 3 minutes and then we'll start the webinar. Thank you.
You can see Anand, right? And you can hear him, right? And we'll start in 2 to 3 minutes. Thank you, sir. Yes, sir. Yeah. So there are about 25 participants. Ready? Okay, we'll start. One second.
I can hear myself when I'm talking. It's going to echo after a while.
Then you remove the thing directly from
Okay.
outside. Then start off. If you try once, I mean,
Yeah.
then no, with the phone, if it echoes, then you remove it.
Because the buffering. So I don't know. Buffering.
Where?
See, it's showing. It's not showing my pic right now. So once the buffer comes to a live situation, no, I put mute. एक पुराना आ रहा है सब.
You start off, lag will be there.
Check.
One second. Let the thing go.
Right. So I'll start the webinar. Good evening, everyone. Thank you so much for joining and appreciate your time. Just to start with, when I was requested to give this webinar, the first question which I asked Mr. Ravindran was how I'm going to value to this webinar because all of you are financial planners and expert in your own field. So, given that, my apprehension was that how do I play a role where I will be able to help you? So, though there have not been too many changes, still I will try to tell you what are there in the fine prints and hopefully it will be helpful to you. With that, uh, a quick round of introduction from my side. I'm Anand Helia, partner in PwC. Essentially, look after expatriate taxation, which basically means any people coming in India or going out of India. And this also, we do a lot of planning, lot of strategic decision for the companies, how they should be landing their people, what could be the right visa, what could be the social security implication, what could be permanent establishment implication, and all that. So this is about me. Coming to the discussion today, uh, just to start with, first thing which comes to my mind is that there is a old saying that person cannot uh, be pardoned with two things. One is death, the other is taxes. So I think that's where financial planners and chartered accountants helps to see how we can, if not make it inevitable, at least how we can make it reduced. So I think that's where your role becomes critical to see where to invest, how to invest. And I'm sure the current budget has just posed more challenges for you. So with that, I will jump into the some of the specifics, which is applicable more from the point of uh, slab rates, long-term capital gain, and other changes which we see. I have tried to differentiate. One is the changes in the effective taxes, how it has been, how it will shape to an individual, and at the same time, some of the compliance requirement which we believe is an important and which can really take away some of the return of income which is earned by the individuals, the high net worth people. So, with that, coming specific to the budget, um, I will slab rates. There have been no changes, so not too much to talk about. However, 3% cess has increased to 4% cess, which essentially means the tax rates will go up, effective tax rate will go up. And I have done one small calculation where if I have taken gross income of a person is 10 lakh and given the deductions, the effective saving comes to around 150 rupees. The tax saving comes to around 150 rupees. The If the income is around 55 lakh, then the savings or actually the additional outflow will be 13,984, approximately 14,000. And if somebody who is in the highest tax bracket and his income supposedly is 1 crore 10 lakh, the effective savings will be 33,000. Sorry, the additional outflow will be 33,595. This is for a person who is below 60 years of age. Obviously, I'm not dwelling too much on the senior citizen. I will talk about some of the specific deductions which are given to them, and there have been a lot of changes for senior citizen. So that's on the slab rate. Senior citizen, coming back to on senior citizen, there have been three additional deductions, come exemptions which are there. Essentially, 10,000 which was there in ATTTA, and for senior citizen which is ATTTB has been increased to 50,000. ATD deductions which was 30,000 has been increased to 50,000. And similarly on the medical expenditure and medical insurance, it was around 60,000 for senior citizen, very senior citizen 80,000, has been enhanced to 1 lakh. Effectively, if I look at senior citizen, there is an additional deduction which goes up to 1 lakh. So just take a pause here. Uh, so this is a monologue, and I cannot see you guys or understand whether if you have any questions. If you have any questions, feel free to ask, and it will be compiled and sent to us, and we will try to answer those questions. So another big change is on the rationalization of long-term capital gain, which is, I think, one of the major change in this budget, and this has an implication for HNI segment largely. So we may be aware by now that the tax rate which has been applied is 10%, and this is on the long-term capital gain. However, the intent was to not make it retrospective, which basically means that the grandfathering provisions have been brought in where any investment which was done till yesterday, which is 31st January, you will still be able to take the benefit of non-taxability on long-term capital gain. Just to give you an example, so let's assume share was invested 1 year back, and that time the cost of acquisition was 100, and on 31st January the uh, price, the sale, the valuation of that share is say 120, and when I sell it after 3 months or a year, if the price of when I sale consideration is 140, then I will be only taxable on 120, 140 minus 120, which is 20 will be my long-term capital gain on which the taxability will arise. Having said this, here some of the points which need to be noted is that how the taxability will work. So to give you another example, so let's assume I'm a investor who doesn't have any other income, no salaried income, no other income, but I only have long-term capital gain of 4 lakh. Then in my mind, the taxability here will be my slab rate benefit I will get plus 1 lakh. uh, Up to 1 lakh there is no long term capital gain taxability which has been mentioned. So the taxability which will arise is 50,000 for me, which is 2 lakh 50 plus 1 lakh minus 4 lakh. So 50,000 will be my long term capital consideration, and on that tax will be 10%, which is 5,000 rupees. Now, interestingly, there are a lot of exemption sections available, 54 sections, 54, 54, EC, and there are a host of sections which has exemptions for long-term capital asset. And 54 EC was one of the favorable section where it said any long-term capital asset, if I had, the exemption was available under 54 EC if you invest in a specified bond. So that has been kind of again taken away or negated by bringing a specific uh, definition to say land or building, which basically means that now you will not be able to take exemption under 54 EC if you have a long term capital gain from equity. So this is going to impact if somebody is looking to take 54 or any kind of exemption benefit, given this is a long term capital asset. However, only section where you can look at taking benefit is 54F. Uh, this 54F again has its own conditions. Just to dwell a little bit on that, the benefit under 54F is only if you are buying a property and it's your first property or your second property. Say HNI has already two properties and if he is investing, will not be able to take a 54F benefit. However, if it's my say first house or a second house which I'm buying and I have a long-term capital gain benefit, I will be able to take 54F. So this is on the rationalization of long-term capital gain. I'm sure there was an expectation that there will be some additional taxes which will be taken from the financial investors and the HNI in different form, which has been done. Though market has not reacted that badly, which means somewhere they were expecting this or they have kind of dwelt with this, and maybe upcoming times will tell us that how this will shape up. This definitely overall brings a lot of revenue to the government, and this is one of the way and finance finance minister will try to balance the fiscal deficit with a lot of benefits provided to uh, agriculturalists on infrastructure. I think this is a good way to balance. So this is on the long-term capital gain relief on the senior citizen. We spoke about the education cess. Other is on the dividend tax. So till now for mutual funds there was no dividend tax, distribution of dividend tax. Now that has been brought in of 10%, which basically means earlier if you were investing in equity or equity oriented mutual funds, you were not paying any kind of taxes. Now with dividend distribution tax and LTCG tax, now any equity kind of investment also will be subject to tax of 10%. Having said that, I think finance minister kind of said one statement which I will try to echo here, that the overall taxes which was paid on this was around 3,67,000 was paid on 3,67,000 crores were paid on LTCG, on which there was no taxes paid. With now coming in this, maybe there'll be a huge tax collection from the revenue department. This would also mean that some of the procedural things and assessments may get picked up. So one need to be mindful when they are doing the calculation. With grandfathering laws also applicable, the calculation will have some more complexities for coming times if the shares were invested before 31st Jan. Coming to some of the procedural things which finance minister kind of spoke was on the fact that on assessment there will be larger transparency and honesty, and the individuals will not be required to travel for that. There will be it will be done through more through the electronic or the digital way, and they are going to notify the scheme, which I think is a welcome change given that if these assessments are done through electronic mode, people may not need to travel, and some of the difficulties which they were facing need not be will go away. One of the interesting thing, again, more from a procedural point, is that 26 earlier there was a section which said that if there is a difference between 26 AS and Form 16 or Form 16A, it the difference was considered as an income, and that was supposed to be there was a notice to say that you need to pay so much of taxes, additional taxes. Now that has been clarified with section 143(1)(6) to say that now the individuals will get the chance to represent that case and to give their argument why there is a difference, which again is a welcome change in a way. Again, small changes. NPS was earlier only applicable for employees where 40% of commuted income at the time of retirement or at the limits given were non-taxable. Now it's not only for employees, now it is also for any individuals. So that again for people of self-employed and others, I think that seems to be a welcome change. So with this, I think most of the things I've covered. I'll just go through it and see if there is anything which I've missed more from the budget point. I know there has not been too many changes. I will speak about some of the compliances which has not been specifically spoken in this budget, but we have seen in last couple of years that some of the compliance things which becomes very important from a HNI point. I'll talk about that, but before that, I'll just take a pause. Right. So I'll talk about some of the compliances which not essentially has come in this budget, but we have seen in last couple of years. These being there in the form of new forms, new enactment, new changes. So I thought I'll talk about that, given that this may be important, especially for a HNI category of people, high net worth of individual, because their disclosures, if are not correct, we have seen a lot of challenges during the assessment, scrutiny, and which ultimately ends up in more hassle for the HNI. Sometimes it also leads to additional interest and penal consequences, which ultimately takes away a large sum of the income which they have earned as a return of income. So, thought of talking about that. One is on the foreign asset reporting. Uh, so, if any individual who has a foreign asset need to be disclosed in the foreign asset schedules which are given, and these are wide to cover any kind of asset. Asset could be in form of bank account. It could be even if you're a signatory for a bank account. So let's take an example. I may not have a bank account, but say I'm a managing director of a company who has a foreign bank account, and if I'm a authorized signatory, then technically I'm supposed to be disclosing that foreign asset in my return of income. Again, there have been a lot of exchange of information. If you see, India has signed a lot of bilateral mutual agreements where through automatic exchange of information, now informations will be exchanged. We are seeing a lot of notices coming saying that okay, this person was in a specific country, and given that have they paid taxes in India, have they claimed a foreign tax credit. So one of the things which I feel you may want to mention to your HNI individuals, that if they are traveling outside India or if they have any foreign asset outside India, it's important and imperative for them to disclose those, because there is an automatic exchange of information. India recently signed with Mauritius as well. Now, India is part of the OECD automatic exchange of information, where most of the countries, and if I recall correctly, around 170 countries are part of this, where they will be exchanging information by the automatic route. So countries like Switzerland, US, Sweden, all are part of that. And we are seeing a lot of 133.6 notice coming from the department on those lines. Again, if they are claiming foreign tax credit, there have been a new form which has come, Form 67. It is important to fill that. This was applicable from last year. This is applicable for the current year which we are running in, uh, which is 17-18. So this form need to be filled when you are taking a foreign tax credit. Good thing is now there is a clear mechanism to compute, and there is more clarity that how you can compute. Is it by only a tax return, or it can be done based on the taxes which have been paid? So these are some of the things which people need to be mindful. Again, there was a Black Money Act which was introduced few years back, which is basically for a resident, and those again has a very stringent clauses, including impose of penalty of 10 lakh on person resident in India who has a foreign source income, and he has not kind of even disclosed. Non-disclosure itself can cause a 10 lakh penalty. So one is on the whole penalty section, where if you have non-disclosed, there is a penalty. If you have underreported on the income, this is on the non-disclosure itself. So what I'm trying to essentially bring out here is that we may be doing everything right, we may be paying our taxes right, but one of the important element is the compliance part of it, and the second is also to ensure that we are filling up the form correctly. So these will be the two things which comes to my mind. In fact, I think finance minister Mr. Jetli also kind of dwelled, where he said the number of returns filed this year has increased. If I recollect, it was 6 crore or something for the individuals. And so that's a welcome change. So there is a clear from 6.47 crore to it has gone to 8.27 crore. Uh, so there is a clear impetus from the government where they want people to be compliant to ensure that the taxes are paid. So that's one thing. Other thing which comes to my mind is I think he shared another data where he said though the returns filed, the average tax collected by the individuals were around 76,000, whereas for self-employed people it was around 25,000. Uh, so clearly, I think they have got now technology and other stuff through which they are trying to track all these information, and all the transactions in some or other way through technology is getting uh, tracked. So it is important. One is to ensure that we are planning our things correctly. So some of the things which I spoke will be important, that we are planning correctly, and at the same time we are disclosing those correctly. With this, I think I've kind of discussed what I had to. I'll just take a pause and then maybe I'll give my concluding remarks, and then it's buffering now. What do we do? Hmm, just reject them. Yeah, email you send. Mine will work, no? Right. So my concluding remarks before I will try to take few questions, I think which has come to me through mail, uh, will be that as a financial planner, now the challenge is more on financial planners because till now equity was clearly the best way to go, given it was the most tax efficient way. Now I think it will be time to, as a financial planner, to challenge yourself more to see what are the other avenues which could be looked upon, whether it be in terms of uh, insurance, whether it could be in terms of real estate, all that need to be evaluated. And I am sure you guys are the best judge to do that. So I will not try to attempt, which is not my forte. So I leave that to you. With that, I'll just try to see if I've got few questions and will try to answer those. So I'm yet to get the question. I understand there are few questions which have come during the course of webinar. So I will try to see that. So just give me a minute. If it comes, I will take it on this conversation or maybe we'll connect back with you guys. Right. I don't think I've got any question till now. So I will close this webinar here, and maybe once I get the questions, I will try to connect back with you guys by via email or can do another session if need be. Thank you so much for your patience hearing and hope to meet you guys soon. Thank you. Do we close it?